Hello, everyone, and welcome to the program. Let's share the next 30 minutes of your time here on Business Incorporated, live to you from Nigeria's news leader, Channels Television. Nigeria is projected to contribute more than 25% to Africa's growth in the next 4 years, with an average rate contribution of 4.8% annually. Meanwhile, the International Monetary Fund has cut Africa's largest economy, Nigeria's growth forecast, again amid oil slump. Plus, oil prices in negative territory today as Saudi Arabia's Deputy Crown Prince Mohammed bin Salman says the kingdom will freeze oil production only if Iran joins the league. Good afternoon and welcome to the program. Let's get started. Let's start from Nigeria, where the International Monetary Fund is forecasting a decline in the country's growth for this year to 2.3% from 2.7% previous. The non-oil sector growth is projected to slow down from 3.6% in 2015 to 3.1% this year before recovering to 3.5% in 2017. A statement released by the IMF late Thursday in the concluded Article 4 consultation with Nigeria shows that lower oil prices have significantly affected the country's economy, pushing government's revenue lower to 7.8% of GDP growth last year. Meanwhile, Nigeria's manufacturing index, or the Purchasing Managers Index, recovered from 50.6 in February to 54.4 reading in the month of March. The latest PMI report released by FBN Quest, an investment bank, shows the output sub-index increase on improvement for stocks of purchases by small and medium-sized companies. For large and more import-dependent firms, there was a decrease in March period due to restricted access to foreign exchange. The report shows just one of the 5 sub-indices, that is employment, was negative last month, while output recorded the strongest reading of 61. From the world of commodities, oil prices battered today as we speak. Oil prices slammed into negative territory as Saudi Arabia's Deputy Crown Prince Mohammed bin Salman says the kingdom will freeze oil production only if Iran joins the league. Crude prices were down 2.22% to around $37.38 today around noontime in Lagos, Nigeria. Iran plans to attend the Doha meeting due on April the 17th, but says no assurance that Tehran will join the crude production freeze loosely agreed in February between Qatar, Saudi Arabia and Russia. Meantime, Saudi Arabia plans to create the world's largest sovereign wealth fund worth more than $2 trillion, ready for a new world of oil. Part of the plans was to sell 5% of KSA's current holdings in state oil company Aramco. And Japan's market suffered heavy losses on Friday after a key gauge of business confidence at big manufacturing firms came in weaker than expected. The benchmark Nikkei 225 spent the day in negative territory and closed Friday 3.55%. China's markets were also in negative territory. Hong Kong's Hang Seng Index was down 1% in afternoon trade, while the Shanghai Composite was down less than 0.1%. In Australia, the benchmark S&P ASX Index finished session down 1.64%, weighed down by the country's big banks and some mining firms. The Kospi in South Korea finished negative 1.12%. And those bleeding of equities continue around the world today. European markets also in negative territory right now. The German DAX around 2% in the red. The Stocks 600, the broader index for Pan-African markets, also in the red. So let's get a sense of the first trading day in April as we wrap up the month of March and first quarter 2016. Let's cross over to Frankfurt Stock Exchange, where Ulrich Bartz is standing by, DWTV financial correspondent for Channels Television. Good afternoon to you, Ulrich. Let's have this conversation around share prices in really negative territory from Asia to Europe, and the futures on Wall Street pointing to another negative Friday. So what are some of the reasons for this, aside whether investors are getting a little bit bearish on Japan?
That's right. The Tankan report there, which surveys the mood in industry, was just at a 3-year low. It dropped, I think, more than people expected. The Tankan report is a mixture of sentiment and of economic analysis. And this does not augur well for Japanese industry. The fact is that the yen has risen. That's a bit of a hindrance to exporters to make money, to be competitive in important markets. And, of course, China also hit by the slowing dynamics of economic growth in China. So that was something that Europe took its cue on. The euro was also up in the morning to over $1.14. Sort of similar to the yen, not a good news for German or for any other exporters from euro area countries, for that matter. Just 3 minutes ago, the U.S. labor market data came in, the big monthly job reports for the month of March, and that is now moving markets. The bare news is that 215,000 new non-farm jobs were created in March. That's a bit better than economists forecast ahead of these numbers, and the unemployment rate is at 5%. Compare this, for example, to Germany's unemployment rate of 6.5%, which was released this week, and you can see that actually the U.S. economy or the U.S. labor market is in quite a good state. The economy doesn't seem to be keeping pace with the labor market, so it'll be interesting to see what the Fed, the U.S. Central Bank, does with this news. And that's why people have been watching this news on the labor market so closely, because it is one of the key elements that the Fed bases its decisions on. When I look now at the DAX behind me, it's clearly losing 2.4%. It's down at 9,731, but it did get just a little boost. I don't know if you can see that behind my shoulder. From that U.S. labor market data. So a bit better news than expected. The U.S. economy a little bit stronger than expected, but not really strong. That seems to be just what the market was looking for.
Yes, Ulrich, I can see that the gentle blip now for the DAX trying to head north. Perhaps we'll be able to erase some of the earlier losses today and those losses that came in from Asian market. But look like, well, first quarter was nerve-wracking. We're starting the second quarter today. No thanks to Saudi Arabia spooking the oil market with the discussion or the talk about Iran joining the oil production freeze and what of that. So stepping into Q2, what do you expect? Do you think things will get a bit of a breather?
People in the market are surely hoping so. You just mentioned the oil market, and that's one of the key elements for performance in the equity markets, and of course also for foreign exchange markets in the second quarter. A lot of the economists I've talked to expect the oil price to wait and see whether that happens. That should boost the mood here in the market, because whenever oil rises, it's taken as a sign that, of course, there's a better demand situation, a better economic situation worldwide behind it, and it takes pressure off many countries, many emerging market countries, Nigeria, of course, being one of them. And that's also good news for the equity markets around the world. A key element will be also interest rates. I just mentioned the Fed and how it will interpret this labor market data. The ECB probably won't contribute much in this quarter because it's practically done all it can for the next little while, has to wait and see whether its measures improve. But I think towards the end of the first quarter, which started so disastrously, people became a little bit more relaxed about the situation, also about the situation in China. So I think most traders are looking at a second quarter that they hope will be at least quieter and not quite as nerve-wracking as the first one.
Well, Ulrich, I was about 10 years old when Apple Incorporated was founded 40 years ago. I'm sure you were a bit more older than me back then when Apple was founded. So, from garage to riches story, a multi-billion-dollar, hundreds of billions of dollars worth in a company. Talk to us about Apple.
Yeah, Apple is just an amazing success story. I heard from someone else in the market, almost a fairy tale as corporations go. Started in a garage by three people, Steve Jobs being one of them, Steve Wozniak, and another fellow, Ronald Wayne, who soon left and probably regretted that for the rest of his life. He took $800 away from it. And, of course, the other guys became billionaires, and they created many millionaires who invested in the shares early and stayed with the company long enough because the share prices just multiplied. And today the company is the world's most valuable company in terms of market value. It's at, let's see the number, $580 billion, Wasson, and superseding Alphabet, i.e. Google, which briefly was #1, but Apple back on the #1 spot.
Yes.
And a lot of investors saying rightly so because it's also the most profitable company in the world. The Christmas quarter yielding about $18 billion in profit. That's just one quarter. Selling mainly iPhones, computers, tablets. The story for the future, of course, is can they continue to go from success to success? Many people doubt that. They say the recent new products showed that there just wasn't enough innovation in there. So it remains to be seen whether the exponential growth also with the share continues. But certainly so far it's been a storybook tale.
Yes, Ulrich, a company with a very fascinating name, Apple, isn't it? Yes, so if you don't have Apple shares, just keep eating apples. It says
yes,
one apple a day keeps the doctors away. See you pretty soon. Do have a great weekend. And welcome to April, Ulrich Bat, with the rest of DWTV team there for us in Frankfurt. We'll come back. We'll talk about Nigeria-U.S. relations. President Buhari is at the nuclear summit in Washington. What's it looking like from Washington to Abuja? We'll be right back in one.